Do you think that we're barreling straight into another icy crypto winter? Not so fast. Coinbase says that the real fireworks might be hiding just around the corner. Okay, picture this. It's early morning. I'm nursing a way too strong espresso, right? Scrolling through the usual doom scroll of red charts and boom. Coinbase drops a fresh April outlook that basically says, yes, it's ugly right now, but hold on to your panic selling horses because Q3 2025 could look like the 4th of July on chain. And well, that got me thinking. If the biggest US crypto exchange is openly predicting short-term pain, but mid-year calm and a full-blown bull run by autumn, well, maybe we should unpack that together. Okay? So it's like kind of we're like two friends, maybe swapping investment war stories over coffee then, right? So stick around because by the end of this chat, you're going to know why Coinbase thinks that May will feel like a kind of sickening roller coaster dip, while July might actually be that kind of rickety kind of track leveling out, and why September could shoot us into the sky screaming with joy instead of fear. First, let's address the elephant. No, the entire circus in the room, the macroeconomic chaos. Now, Coinbase kind of kind of warns that the next few weeks, will probably feel like kind of walking over a floor made of bubble wrap, right? Every step, pop, another headline about interest rate pressures here, a nasty kind of tweet about tariffs over there. And if you've kind of checked the charts lately, you already know that Bitcoin and the Coin 50 index kind of slid below their 200-day moving averages. Now, for the kind of uninitiated, that little line is like crypto's long-term heartbeat. Dip under it and traders start whispering bear market, the way that kids whisper ghost stories at sleepovers. But here's the twist. Coinbase calls this dip a bigger reset, not a kind of funeral march. And why? Well, because investors are bracing for policy shifts, meaning that they're basically kind of catching their breath before the next sprint. So imagine seasoned kind of marathon runners slowing down at kind of mile 20 so that they don't kind of puke, at 21. Now it's that kind of pause, that no one's kind of giving up the kind of race. They're just actually kind of picking kind of rogue corn chips, from kind of their teeth before they maybe cross the finish line, right? Or for that finish line photo, essentially. And, if we kind of needed extra kind of drama, US-China tensions recently kind of shoved the kind of Chinese yen into an 18-year low. Now that's kind of like watching your parents argue in a kind of front row seat during a kind of road trip, right? It's pretty, or at least you're pretty sure that the vacation isn't cancelled, but the vibe is kind of, definitely uncomfortable. Now, meanwhile, of course, the Fear and Greed Index kicked off 2025 screaming extreme fear. Now, which is basically crypto's version of the weather app telling you tornadoes, hurricanes, and alien invasions all at once, right? Then, of course, you've got, Morningstar kind of chiming in, too, right? Noting that global policies are still tight and interest rates expectations kind of refuse to loosen up. Translation, well, the markets are wearing skinny jeans 2 sizes too small, and it's hard to dance when you can't breathe. But here's where the mood flips like a pancake, right? Coinbase expects things to stabilize from May through to June. Yes, like that, potentially even that soon, right? They point to historical echoes, right? Think back to 2020 when Bitcoin face planted from, 10 grand to around $3,850. Everybody kind of panicked, right? Memes of crying kind of people flooded crypto Twitter essentially, right? And then by May, it was kind of, chilling around 6 to 7K as if nothing had actually happened. And it's like that friend who kind of, trips kind of, spectacularly on the kind of sidewalk, right? Stands up and, struts away pretending, well, it was all a performance art. Now, the takeaway here is quite simple. Panic is loud and dramatic, but recovery is quiet and relentless. 𝗕𝗘𝗪𝗪𝗀𝗪 is humming the same tune as well, predicting a bullish second quarter rising from today's rubble. So they kind of took a traditional financial signals, right? Bond yields, equity flows, and even that kind of weird spark sparkle in gold's eye and see risk assets kind of regaining swagger. Then there's ARK Invest, essentially waving pom-poms in the background with their kind of big ideas 2025, shouting unprecedented growth. That's Cathie Wood speak for buckle up buttercup. Now, let's talk about the institutional money, because big players moving in like, elephants doing, cannonballs into a kiddie pool, right? Everybody kind of notices. Now, Coinbase's wider 2025 outlook, it shows demand from pension funds, hedge funds, and even those conservative asset managers who once called Bitcoin rat poison squared. Now, why the sudden change of heart, you ask? Well, spot Bitcoin ETFs, baby, right? Now, they turned buying Bitcoin or BTC from a kind of nerdy kind of hardware wallet ritual into a button that you kind of click inside your retirement account. Deeper liquidity, stronger fundamentals, potentially fewer gut-wrenching price swings. Imagine crypto getting training wheels for the big boy road. And here's the juicy bit. Coinbase sees Q3 2025 as the moment the fuse hits the dynamite. So think about the timing here, right? We're fresh off Bitcoin's halving supply of new coins slashed in half, when demand traditionally picks up. Now, if crypto were a nightclub, the bouncer just decided to let fewer people in. Now, while social media influencers are blasting it's the place to be. And to that new kind of crypto ETF, approvals expected also to roll out, plus cleaner regulations. Finally, maybe, fingers crossed, right? More regulatory clarity, it means fewer people scared of kind of playing in the sandbox. ARK Invest kind of swears this kind of maturing infrastructure is the secret sauce for long-term sustainability. But let's not gloss over the problem, smack dab in our faces. Volatility right now is stomach turning, right? One day, Bitcoin's kind of flirting with 60K, and the next it's kind of ghosting us at 50K, right? Obviously not real numbers, but you kind of get the idea, right? Macro headlines, they kind of jerk us around like a kind of faulty elevator, up and down and suddenly stop, right? The retail investors, this kind of an emotional whiplash, right? For institutions though, it's merely a line item, right? That's the challenge here, right? How do we small fries kind of stomach the chop long enough to actually see the potential fireworks that Coinbase promises? Well, here's how I see it, right? Remember that 2020 plunge, right? If you kind of raged quit then, well, you missed out on Bitcoin's sprint past $60,000 just a year later. Now, pain is, often kind of the cover charge to enter the party here, right? Coinbase is basically telling us you pay now and you dance later. And, IO and behold, central banks might actually start loosening policies, by early summer, at least says Morningstar. Now, lower rates, of course, could send bond yields south, right? Forcing big players to choose, or at least to maybe even chase returns somewhere maybe riskier, like say Bitcoin or the altcoin cousins. Now, the floodgates, of course, could open up right around the time, that we kind of expect to kind of end summer and go into kind of autumn. Now, it's going to be really interesting to see whether this timing kind of plays out. And of course, there's going to be a whole host of institutional FOMO around that time. And that's kind of the thrill ride here that Coinbase sees on the horizon. So just imagine, right? At least July rolling around and headlines shift from extreme fear to cautious optimism, right? Bitcoin kind of steadies above the 200-day moving average. Altcoins kind of stop bleeding out, and your group chats go from, this kind of doom and gloom to excited speculation, right? Now kind of push to September, Q3. Right? That kind of momentum, that's going on, plus ETF inflows, plus maybe even friendlier regulations around custody. Suddenly, you're not kind of doom scrolling anymore. You're actually refreshing your portfolio with a kind of goofy kind of grin at 3 a.m., calculating if that extra decimal point means a new car or finally upgrading your internet so that your Zoom calls don't, keep freezing on you. And let's spice in one more twist. Global trade tensions, right? Resolving even a fraction, could toss fuel on the risk asset bonfire, if you will. If the US China relations kind of thaw even slightly, then the yen stabilizes, supply chains unclog, and corporate earning projections maybe brighten. Markets love that stuff. It's kind of like switching from bad cafeteria coffee to, well, artisan kind of pour-overs, right? The sentiment kind of perks up rather fast. Now, here's the climax, right? Picture the first week of October 2025. Bitcoin rips past its previous all-time highs. The Coin 50 index surges. Altcoins you forgot you had start pinging your phone with green arrows, right? Financial news anchors, who 3 months earlier were kind of preaching caution, now kind of wear that "we told you so" kind of smugness, even though they didn't actually tell you anything. Now, Coinbase's forecasts, of course, look eerily kind of, I guess like prophecy kind of esque. And you, my friend, are sitting there kind of remembering this exact conversation, thinking, glad I didn't bail out when the charts looked like a crime scene. Now, of course, none of this is guaranteed, right? Crypto can still rug pull your emotions, but the point is to widen your lens here, right? Short-term noise feels deafening, but macro structures, is, quietly setting the stage here, right? Dwindling new supply after kind of the halving of last year, institutional access through ETFs, potential easing of monetary policies and tech maturing, at least maturity, making blockchains more than just, well, flashy buzzwords. And so where does this leave us? Well, Coinbase map says, that rough seas until mid-May, calmer waters by June, and possibly rocket boosters in Q3. Now, you could treat these months like kind of training montage, right? Stacking research, dollar cost averaging, maybe even reallocating that spare coffee budget into your favorite coins, because the starting kind of gun fires, or at least when the starting gun fires, you don't want to be kind of the spectator, kind of whining about missed chances. You want to be in the race, laces tied and ready to sprint. All right, let's land this plane then, right? We've kind of walked through the ugly charts, right? The scary headlines, the cautious optimism of mid-year, and the explosive potential of Q3. Whether you're a kind of hardened trader or someone who still confesses or is confused by blockchain, with kind of Minecraft mods, remember, right? Markets move in cycles. Fear is temporary, and preparation turns, volatility into opportunity. The question is, are you buckled in for the ride?